So we actually had the opportunity to handle a case, a real-life example of a case that touches on all three types of bad faith recognized under Arizona law. Bad faith in the underwriting process, bad faith in the claims investigation, and bad faith wrongful denial of coverage. So in this case, our client made known to the insurer in the underwriting process its expectations of coverage going forward. And that meaning what types of risks it expected to be covered and what types of claims it expected to be covered. And knowing this, the insurer made no representations to the contrary. It gave the impression that yes, those types of claims would be covered. So lo and behold, company gets sued and submits a claim to the insurer. After a lengthy quote-unquote evaluation process, the insurer, after it hires outside coverage counsel, sends client a letter saying, sorry, you don't get coverage for this type of claim. Much to the astonishment of the client and the client's insurance broker, because they thought that they had coverage for this exact type of claim. During the claims investigation and claims evaluation process, conversations were held, letters were written between the client and the insurer in an attempt to reverse the claim denial. During the claim handling process, even after the denial, the insurer was told that their position was in contravention of the underwriting intent, and that they needed to review the underwriting files and speak to the underwriter to have a better understanding of what was intended to be covered by the policy. Unfortunately, the insurer did not do that. That, in and of itself, is a form of bad faith. Second is that they stood by their denial without going back and looking at the underwriting intent and the underwriting file to determine what was intended to be covered and what the policyholder's expectation of coverage was. So here you have bad faith in all three phases of the insurer-policyholder relationship. You have an insured during the underwriting process, either one, being silent when it knows that it's going to deny coverage for certain types of claims, or two, actively misrepresenting the type of coverage that's being provided by their policy. And then in the second stage, you have an insurer that's unwilling to do an adequate and thorough investigation of a claim. They're not even willing to pull their own underwriting files and talk to their own underwriter to determine the underwriting intent. They're siloing the claim process by itself and walling it off from the underwriting. And then three, as a result of the bad faith in the first two instances, they're wrongfully denying coverage in bad faith as well. So when you have bad faith in any of these phases, then the question is, well, okay, what's the remedy? And again, this is state by state specific, but you can look at tort damages, and those come in a number of ways. But really, you can look at what does that really mean. In most cases, it's going to mean consequential damages, and that can include your attorney's fees for having to file a lawsuit to enforce your rights under the policy. That can include, if it's a property damage case, like a business interruption case, any consequential damages as a result of you're not having use of your property. And then it can also include punitive damages to punish the insurer for its bad faith conduct.